Good morning. It is July the 21st, 2016, rolling into option expiration tomorrow in the Treasuries. And they're in a pretty tight range and will probably stay so without some big help from the E-mini. The overnight markets were quiet, not a lot of movement. Asia was up. Europe was off. At 7:30 today, the European Union picks up the mic, and they're expected to issue dovish statements to support the markets, both equity and debt, and their economy. So they expect more easing in QE, probably more definition on how they're going to loosen up their QE purchases of debt securities across the EU. Maybe some language about Italy. So the stock markets are expected to get a boost in 40 minutes from the ECB. Japan overnight said no helicopter money this time. So central banks are really masters or experts at playing the markets rhetorically. They'll try to do all they can do speech-wise, word-wise, as opposed to actually voting real hard dollars. So find ourselves in a trading range because of option expiration, and perhaps, as Rich pointed out yesterday, the next week's FOMC meeting, where no changes are expected, is holding the markets in check. A lot of it has, it's summertime trading. We're not getting, if you look at the slow grind up in the stock market, there's no enthusiastic buying behind that. There is buying. Get started in the trading community. Large institutions, usually by definition, are already long, so they don't have to do a lot. They're just enjoying the ride, letting traders take us higher. So I don't think that's going to change either. So here we find ourselves in a trading range. We're definitely dealing with a B. We definitely are at the bottom side of the trading range. So maybe a little lower, maybe stops below 25. So first buy 21.25. Then 17 to 13. On the sell side, playing for a trading range, we'll try 31s to 03, sell 1. 7 to 11, sell 2. If they can't break 131, 20, 24, then I think the market's got a pretty good chance to trade back up to 132, 132.04. The news today. Jobless claims 265, the default number. Philly Fed +5, that could come in lower than forecast. Chicago National Activity Index, it was -0.51, that could come in lower than forecast also. FHFA Housing Price Index +0.4, probably will come in at that number. Existing home sales 5.475, could come in lower. LAI at +0.3. No one pays any attention to that because of the interest rate component. Remember back in the days when interest rates would go up and go down with the economy. When the economy was expanding and getting stronger, interest rates would go up to slow things down. When things started to slow down too much, interest rates would start to go down. That game certainly has been set aside for a while. And natural gas inventory is +40B. So look for a trading range, or going to play for a trading range market today. And I think to move the market big time takes some help from the E-mini. And I really don't see that happening today either. Slow grind higher. The stock market's going higher because the Fed wants them to go higher, because the administration wants them to go higher. Part of the political message will be, don't rock the boat. Things are so great, you can't screw them up. And they will certainly have Wall Street's backing and large trader backing. And you can't blame them. I mean, they're living pretty fat right now. Okay, first band of support is 2024 on the bond. So 17.13 by 1. Then 1 to 5 by 2. 170 is a pretty big number. It wasn't too long ago we were at 175. On the sell side, the spill came from 171, so 71, 7104, number 1, so 7 to 11, sell 1, 19 to 23, sell 2, would allow them to get stops above the Globex highs. Looking at gold, they managed to get stops. We got down to our 10 to 12 area where we were buyers last night. Held up pretty good, didn't it? Nice trade, wasn't it? So we're at 19 and we had this break at 15. So right now I would say 16 to 14 is buy 1. Buy 2 is 10 to 12. So we're trying to buy 10s to 15s. On the sell side, 23, 25, sell 1. 28 to 30, sell 2. And Frank, you can send me your whatever you want me to look at privately, or you can put it in the room. Wherever you're more comfortable. Okay, the yen flew last night against the dollar. The statement came out there would be no helicopter money. Forget the guy's name, Kodura, I believe. Don't hold me to that one. 1075, sell 1. That's where we were last night. Worked out pretty well. 111 even, sell 2. Might take a 1050 to get in. We'll put a question mark right here. That's a possibility. On the buy side, would like to get it done. We didn't. 1010 was yesterday's low, so it looks like we're going to test support. First little band of support is going to be at 25. Then the buck to 10. I see a trading range today, but if you had to take a trade before the ECB picks up the mic at 8:30, you'd be short into that news. Whatever they say to strengthen the market, isn't going to be good for the euro. Carota, thank you, Mont. I knew it started with a K. There was something in there, but appreciate the backup. Crude oil. Well, we got our 46.50 looming large, 46 and a quarter. We were selling into 46, so we had a 45.75, 46 sell last night in crude. That turned out pretty good if you leaned against 46. So 46, 46 and a quarter, sell 1. 46.50, 46.75, sell 2. Buy side, think we're headed a little lower, so we'll play for 45, 45 and a quarter, buy 1. 44.50, 44.75, buy 2. I think we're headed to 44 minimally before the selling is over. Don't think we'll do it today, but this market can move. Contract expiration is behind us. That was yesterday. And contract expiration usually brings in support as the shorts roll from the expiring contract to the new contract. Buying the front month, selling the back. Okay, the E-mini, pretty quiet overnight. European Central Bank press conference is supposed to be supportive. I would assume it's so. I can't see any one of these central bankers coming out and saying sell the stock market. Things are ridiculously overpriced when you look at the economy and the contracting global economy and the contracting local economy and the contracting economies, especially in the EU. That won't happen. So they will be supported. And, you know, the breakout came at the 60-62 level. And that's pretty good support. And we've got a B right here. So 60-62. Maybe let's make it 60-63, just where we were yesterday. That is support. And 55-57. So we like to buy 55s to 60s. You get right down to it. Selling failure to take out and hold 70. There will be some profit taking starting at 74.50, so 74.79 for sell too. 21.75, our first trading target. Then it'll be 2200, and then 2235, and the 2235 comes from pretty good technical analysis that put his figures up. Basically 2200, 2235 is where he thought the market was going, and right now he's been pretty good at it. So 265 jobless claims. Philly Fed 5. Chicago National Activity Index come in lower. Philly Fed could come in lower. FHFA housing price plus 0.4, probably will get that number. Existing home sales 5.475. Could come in lower than forecast. The market will pay attention to that. LEI plus 0.3. No one will pay any attention to that. And natural gas inventories plus 40B. So I guess after the ECB announcement, jobless claims, then existing home sales will be the news focus.